Alright, so in today's stock market recap for the week, I want to go over three companies that reported earnings this week. I want to go over everything about these companies, like what did they report as far as revenue, as far as EPS, and I also kind of want to have a discussion about what I think of the numbers that they reported and also how these companies are doing today. And I also want to hear you guys' opinions about these companies. So if you have any comments after the video, just leave them down in the comment section. Alright, so the first company that I want to go over is Tesla, okay? Tesla is such a polarizing company, polarizing stock. I feel like everybody has an opinion about Tesla, whether it be for the good or for the bad. Um, but let's see what Tesla reported this week. So, as far as revenue, they reported $4.54 billion versus $5.19 billion expected by analysts. So, they missed on revenue. Going on to EPS or earnings per share, they posted a loss of $2.90 versus what analysts expected of 69 cents per share. So that was a miss on EPS. So Tesla this week, after they reported, they missed on both revenue, they missed on both EPS, and this was kind of a strange quarter in the sense they took a lot of one-time charges. They said a lot of things on the call related to demand, and a lot of their cars were shipped out in the last 10 days of the quarter, so a lot of the shipments were shifted into the second quarter, so that kind of like affected their numbers. So this was kind of a strange quarter, but as far as what they reported and what analysts were expecting was a huge miss. But in going on, Tesla has been facing some problems. They were down almost 12% this week. So they have their earnings, and then also they have their battle with the SEC going on, which was just resolved, I think, this Friday, in which the Elon Musk made a deal with the SEC to not talk about the company's finances and things like that on Twitter without it being approved by a third party. So that's been kind of something ongoing that's been hampering their stock price, and I think their stock price was up a little bit on the news that they had to deal with the SEC. But for this week, earnings along with the SEC battle has been kind of hampering their stock price to the point where they had hit a 52-week low this week, and they had broken a key resistance level in their stock. So I think Tesla is one company to keep an eye out for as far as the company and as far as the stock price. Elon Musk announced a lot of things on the call. He announced that he doesn't expect them to be profitable for the second quarter. So that's one thing to note. He announced that he's starting an insurance business for Tesla, so that can kind of like raise capital that way. He expects to raise capital after earnings. In the past, he said that there was no need to raise capital. In this earnings, he kind of shifted tone, and he said that a capital raise may be appropriate in the future. So that's one thing to look forward to, as like what Tesla's going to be reporting in the next earnings. All right, so the next company that reported earnings this week is Facebook. I'm sure a lot of you have a Facebook account, you use Facebook, so you understand the company and how it works and how they make money. All right, so going into Facebook, what did they report this week? They reported revenue of $15.08 billion versus $14.98 billion expected by analysts, so they beat on revenue. And as far as the earnings per share, the EPS, they reported earnings per share of 85 cents per share. And I don't have an expectation right here just because for this quarter, Facebook took a one-time charge of $3 billion. As you heard on the news and everything, they have a lot of privacy concerns and a lot of things going on right now. So they're taking a $3 billion charge by the Federal Trade Commission inquiry that's going on right now. And so that's a one-time charge that's happening this quarter, so we're not going to compare the EPS to expectations just due to that. But going on, we have daily active users. So if you're kind of looking at social media companies, these are some of the metrics that you would want to look at. So daily active users, 1.56 billion people versus 1.56 billion people expected. So that's kind of in line. Monthly active users also almost in line, 2.38 billion versus 2.37 billion expected. So that's also kind of in line. Another thing that's very important when looking at social media companies is the ARPU, average revenue per user. So that's what this is, average revenue per user. And so they reported average revenue per user of $6.42 versus $6.39 expected. So that's very good for a social media company. Their average revenue per user is going up, and it was up 16% year over year. And as far as assessing a company, one thing you want to look for and think about is what is the growth for this company look like. And so for Facebook, they're growing their average revenue per user, which is good for a social media company. They're growing their ARPU. But looking into other things, their user base is relatively flat in the U.S. and in Canada at 186 million people. But looking across, we have Europe, which is actually growing their user base. I think it was up. Let me get their number right. It is up. It grew to 286 million people from 282 million people. So that's one thing to look for. And one thing to note is that what Facebook said on the call is that they're undergoing a major transition from having newsfeed ads to also having ads in the stories. So that's kind of like another growth story right there. And the fact that they mentioned that Facebook, Messenger, WhatsApp, their stories future has now reached 500 million daily active users, which now joins in the likes of Instagram stories, which have reached 500 million daily active users in January. So all of their apps right now have 500 million daily active users for stories. And so as far as growth, the company is experiencing, these scandals and privacy concerns and all of these things. So they're putting a lot of money right now into privacy and into encryption and all of this. And so that's kind of what they said on the call. Their central focus right now for the next 5 years is to focus on privacy and to stay the leader in the social media industry. All right, the last company that I want to go into is Amazon. Amazon reported earnings this week, and let's see what they reported. All right, so they reported revenue of $59.7 billion versus $59.7 billion expected. So they matched in line with revenue. As far as EPS, they reported EPS earnings per share of $7.09 versus $4.72 expected by analysts. And so that they beat huge on EPS. All right, and so going on, Amazon Web Services, which is their huge growth driver, they reported $7.7 billion versus $7.7 billion as expected by analysts. So that was kind of in line. The trend we're seeing right now with Amazon is slowing revenue growth, but fatter profit margins. And so going into this a little bit, their revenue was in line. It was up 16% year over year, but we're seeing a slower expansion in revenue. As far as Amazon Web Services, this was in line. That was up. The sales for Amazon Web Services was up 41% year over year, but that's kind of a deceleration from the 49% before. And so we're kind of seeing decelerating growth, but still very commendable growth, just decelerating. But we're seeing fatter profit margins. And so they had a net income record of $3.6 billion. Their operating profit, I'm looking at my notes right here, their operating profit of $5.4 billion represents a 7.4% margin, up from last year's 3.8% margin. And so we're seeing higher margins and things like that. And so one thing to note during the call is that their guidance was kind of light. And so that's kind of one reason, like the stock was kind of mixed after the report. They had great numbers, but their guidance for the next quarter was kind of light. And what the CFO said on the call was something that is interesting and something that's like big news for Amazon and for all other e-commerce players out there right now. And so what the CFO said is that I'm looking at my notes right here, the operating profit is going to be weaker due to an $800 million investment in expanding and making free one-day delivery shipping for all current Prime members. So Amazon is moving from 2-day free shipping to 1-day free shipping for Prime members, which I think is fantastic if they can pull that off. So we'll see how that works out and how that goes. But that is something that's been in the news, and it's just like, oh my god, like what is Amazon doing right now? They're kind of doing a lot, going into a lot of investments. Now they have the 1-day free shipping for Prime members. So that's something to look forward to as far as the next earnings call and things like that. So if you like this video, please like it and leave a comment on what you think about these companies. And I'll see you guys in the next one.